Hello everyone, how are you? I hope all are doing well. So today we will start with the new concepts of income tax. But before that, I hope whatever the last two lecture we had that you have gone through and also submitted the test. Okay, so we quickly revise what we did in last lecture. We introduced the Income Tax Act 1961, also had some put some lights on income tax rules 1962, uh, notifications, circulars, notifications, and also the case laws. What is mean by case laws? And then after the Finance Act. So how the Finance Act is connected with the Income Tax Act, that also we discussed in last lecture. So today we will start with the new concept, that is the first one concept is the previous year and assessment year. I also discussed these things in last lecture, but have some more detailed analysis of these things. So that's why we are talking about this, because it is a very important one. All the time we have to deal with these things whenever we want to file the income tax returns. That time we very sure about the previous year and the assessments year. So that's why we are discussing these concepts again. Okay, so as per section 2 subsection 9, the assessment year is a period of 12 months starting from the 1st April every year. So it's 1st April to 31st March every year is the assessment year, the year in which the tax is paid. Actually, it is a year in which the tax is actually calculated and assessed. Okay, this is what the assessment year. But the section 2 subsection 34 defines about the previous year. Okay, what is this? The previous year is the financial year. You know everyone what is financial year. It starts from 1st April, ends on 31st March next year, right? That is what is financial year. So this financial year immediately preceding the assessment year is known as your previous year. So last previous year or the last financial year is your previous year, and the current financial year is your assessment year. That is what the concepts used in income tax. So you can earn your income in previous year. That is, suppose if I want to give the example, live example, that the previous year for this assessment year, what is the assessment year it is going on? It is the 24-25 assessment year is going on. And what is the previous year we have? It is 23-24. Why it is 23-24? Because it starts on 1st April 2023 and ends on 31st March 2024. That is your previous year. Yes, you understanding what is I am telling you? Yeah, one sec. What happened? It is stopped sharing. Huh. So I think you can see the screen now. Yeah. Huh. So how the previous year and previous year and assessment year are different? So let's see. So first, what is previous year? Previous year means the last financial year. Please bear with my handwriting. And the assessment year. Assessment year is the current financial year. Okay, so the assessment year, what is the assessment year it is going on? It is 24-25. And what about the previous year? It is a 23-24. Okay, this is what the previous year and assessment year difference have. Okay, what is financial year? Financial year starts with the financial year is equal to, it start on 1st April. Suppose this current financial year I am talking about, then the 1st April 2024 and it is going to end on 31st March 25. Okay, understand this? The financial year is permanent one. In India, it is starts on 1st April, ends on 31st March, and the current financial year is your assessment year, and the last financial year is your previous year. And why it is important? In whatever the previous year's income you have, that income is assessed in current financial year. That is assessment year. Got this? Okay. So whatever, because unless and until the year is get completed, you can't calculate the total income of that total one financial year. So that's why we have to wait up to 31st March. Then in a next year, we are going to assess. We are going to tell the income tax department that this much income we had in last financial year, and we are paying the tax on that in this current financial year. So the current financial year become your assessment year, and the last financial year become your previous year from income tax point of view. Understand this thing? Okay. So previous year's income is assessed in assessment year. That is, the total tax is calculated and paid to the income tax department. Also, the ITR return form is submitted with the income tax department in the assessment year. Okay, but the whole things related to previous year, the whole income which is related, which is assessed in assessment year, is the previous year's income. Previous year means last financial year's income we are assessing in a current financial year. That is the assessment year. Understand these things? Okay. If you have any doubt, you can ask me. Okay, in a chat also. You can message me. You can comment on these videos also in Google Classroom. Okay. If you have anything, you can please ask me. So we will clear the doubt accordingly. Okay. So next, I think you understand what is the previous year and current year, previous year and assessment year, right? So let's go to the next slide. Now we are going to understand what is the total income and the tax payable. So how the total income is arrived at? It is the steps by step what we are going to study in these lectures also. So you can consider all these are your syllabus also. Okay, this much it is important. All this is what we are going to discuss in coming lectures, and it is also your syllabus of this certificate course. Okay, so let's see about this, discuss in a short. So first step what we have to do is that they determine the residential status. It is very important one, because the tax rates are different for different residential status. Suppose if the person is resident of India, he have to pay different rate of tax. If he is a non-resident of India, then he have to pay different rate of tax. That also we are discussed, but at the time of taxation, at the time of calculation of taxation, we will discuss the rates also. Then second step, what we have to do, classification of income under different heads. There are 5 heads of incomes. From those we are getting the total income. So that's why we are also classifying the income under these 5 different heads. Then the exclusion of income not chargeable to the tax. So for example, the agricultural income is not taxable to the tax. So that was excluded, but it is disclosed in an income tax return. Okay. Then the computation of income under each head. Yes, whatever the 5 heads are there, accordingly we have to compute the income of each head. Then clubbing of income of spouse, minor, child, etc. Sometimes the spouse, here spouse means husband or a wife. Suppose I am a girl, so I have a husband. Okay, suppose there is a boy or the men, they have a wife. Okay, so in this way this spouse word is used. And the minor child, minor means the child which is less than 18 years old. Okay, so if the spouse, then that means the husband or a wife is not working, but she or he may be a homemaker, or they may not have a recognizable income, source of income, or it is not a permanent one, it is a temporary one. Source of income may be a temporary one of spouse. So that time, the whatever the income of spouse I had, I'm going to club it with my income. That means suppose I had an income of 5 lakhs and my husband has an income of 1 lakh, so I have to show it as a 6 lakh income. Okay, and also suppose my minor child who is less than 18 years old, so he has also earned rupees 20,000 by gifts or by way of prizes. So that also income I'm going to club. So here how much total income I'm going to show? My income of 5 lakhs, my spouse income of 1 lakh, and my minor child's income 20,000. So the total income of mine is 6,20,000 for previous year. This is how the clubbing is done. Sixth step is the set off of or carry forward or set off of losses. Set off or carry forward and set off of losses. It may be the set off and carry forward of losses. That is what the main the statements we have. What is set off or carry forward? That means, suppose in case of most of the times it is the case with the business. So there may be some losses in a previous year, or it may be in case of share markets. In particular years there may be some losses. So suppose 1 to 3 years we are suffering with the losses in share market. So that time that losses we can carry forward. Suppose in last 2 years we had a 30,000 and 20,000 loss. So the 30,000 loss is carried forward to last year, and the last year's 20,000 is added, and the total 50,000 loss is carried forward to this year. So this is how the carry forward procedure of losses goes on. But suppose in this year I had a profit of rupees 1 lakh in share market, so that 50,000 loss is set off against this 1 lakh profit, and now I have to show only the 50,000 as my total income. This is how the losses are carry forward and set off. What we done, 30,000 and 20,000 of last 2 years we carry forward for this year, and as this year I had a profit of 1 lakh, so I set off that 50,000, total 50,000 against my 1 lakh profit. This is how the carry forward and set off goes on in case of losses. Understand this? But this carry forward and set off is permitted only for 8 years. Okay, so suppose I 30,000 carry forward in first year loss, that was carry forward up to 8th year. After that I can't carry forward that loss. Okay, this is how the set off and carry forward is going on. Then the computation of gross total income. After totaling all the sources, that is 5 sources of funds, sources of income, we have to club the spouse and minor child's income. Then we have to set off the losses. Then after we will get the gross total income. Then after getting the gross total income, we have to deduct the deductions. There are many more deductions as per chapter 6a. Okay, so mostly popularly the 80C, section 80C tells you about what can be deducted from the gross total income. That is going to save your taxes. So for example, suppose you paid an installment for LIC insurance plans of 10,000. So that is also applicable for deduction. There is a list of many items which we are going to study, but it is for example only I am telling you. Also, if you paid the installment of your housing loan, that is also available as a deduction under chapter 6a. Okay, so this is how the deductions can be going to save our tax. But these deductions have a limit. So up to 1,50,000 only we can get the deduction. This is what the limit of the deduction. So after deducting these, we will get a total income. Okay, what we have to do, we have to deduct this deductions from this gross total income. So then we will get this total income. So after getting the total income, what is the next step? We have to calculate the tax. The application of rate of tax on the total income is done. And then after getting the tax, we have to charge a surcharge. It is a 4% surcharge we have to charge all the times on a income tax. Okay, whatever the tax you have calculated here now, on that again you have to pay the surcharge. It is a education and higher at maybe a school and higher education cess. That is what a surcharge that we have to pay. Okay, sorry. One sec. Surcharge is a extra charge. That is the 10%. It is not a 4%. It is a 10% surcharge we have to pay all the not all the time. If the total income goes beyond some specific limit, then we have to pay the surcharge. Otherwise, it is not. Suppose the 50 lakhs is the limit, then if your total income go beyond 50 lakhs, then that time you have to pay the surcharge. Otherwise, you have to pay the education cess. That is a 4% cess you have to pay on this income tax. So after getting all these calculations, we are whatever we have paid in last year, advance tax and TDS, that we have to deduct from the tax liability. So whatever the tax you calculated, that is your tax liability. Okay, and this TDS we have to deduct because we already paid this much to the government. Advance tax, with the through advance tax and TDS, we already paid some tax. Then whatever left, that we have to pay, otherwise the government is going to refund us. So for example, suppose we had a tax liability of rupees 50,000, and the advance tax and the TDS what we paid is 30,000. Then what we have to pay now? 20,000 only. Okay, but if the reverse case is there, if we have only 10,000 tax liability and we paid 15,000 as an advance tax, then 5,000 will be refunded by the income tax department to our bank. Okay, the income tax department going to credit this 5,000 refund to our bank account. This is how the procedure of income tax department goes on. This is how the assessment of income tax department goes on. These are the whole things which we are going to study in these coming 30 lectures. So let's start with the first concept we already discussed, that is the previous year. Next concept is your person. What is person? This is also one of the concept of Income Tax Act. Person is person. We have to define the person, because as we are collecting as the income tax department is collecting the tax from the person, so that's why it is important to define the person all the times. So person definition includes individual. That means whatever you all are individuals, so the individual is included in person, definition of person. Also the HUF, Hindu undivided family, is also included in person's definition. HUF, what is HUF? So Hindu undivided family, there are many more families which are doing the business together, they also live together. So no, there are the whatever the income is earned by them is the collective income. So we can't recognize who earn what extent of income. So that time we collectively assess the whole family as a HUF, as a Hindu undivided family. Okay, so the main person or the elder most man in the family is the karta of that family. So the HUF also bears a PAN number, and accordingly the HUF going to be taxed. Okay, then association of persons. What is association of persons? Association of persons, these two things we will understand at a one point of time, because these two are related one. The association of person and body of individual. Body of individual means we are the individuals. I am, or my friend, or my husband, or my mother, father, all are the individuals. If they come together and form one start one business, then that is known as a body of individual. Okay, and association of person, what about the association of persons? As the person definition includes all these things, right? So this is what, if suppose the one individual, one HUF and one company come together, that is known as a association of person. Okay, acha. So what is the example of this association of persons? We can understand with the help of this thing. One sec, I will tell you, I will show you how we can explain these things. So, can't end this. 1 second. Okay. Acha. Here we had some examples, so you will understand what is that person means, what is the individual means. We also had some examples, so you will understand in detail what is person, what is AOP, what is BOI. All these things we can have here. One second, give me few seconds, so I will explain you better. Okay. Huh. Here. Hmm. Residential statistic. Hmm. Sorry for taking your time. Okay. So this is how person includes all these things, but what is AOP and exactly BOI means here? Let's see. So AOP means a group of persons, whether individual, HUF, company, firms, whether you can see this thing. I will enlarge this one. Okay. So AOP means what? AOP means individual, includes the individual, HUF, yes, individual, then the HUF, then the companies, firms means partnership firm. All these things all these persons are included in AOP. Okay, that is the association of persons. Yes, and what about this uh, BOI? It is only the body of individual. That means one or two individual persons come together and start a business. That is a BOI. Get this? So here what the difference we had. Then we will discuss. We will take this example also, but before that we will discuss about these things. That yeah. Firm means it is a partnership firm. One, two or more persons comes together and start a business for making a profit only. That is a partnership firm. Then the company means when seven or more persons come together and start a business, that time it is a company. Okay, there is a private limited company as well as the public limited companies is there. You know all those things now, as you are commerce students. If anyone has from arts faculty, for them I am explaining this, that at least 7 members should be there in a company. The company should be registered with the registrar of companies. That time it has become a company. Company should have their memorandum and articles of association as a documentation they have to do, and these documentation they have to submit as a registration form, with a registration form to the registrar of companies. That time it becomes the company. If the company is owned by only few members, then that time it is a private limited company. And if the company, and what is the limit for private limited? It is minimum 7 members and maximum 51 members should be there. But if the company offers the shares to the public, okay, and the public also, the owners of that company, become the shareholders of that company. That time the company becomes the public limited company. So this is also one of the member of the persons, also included in the definition of persons under the Income Tax Act. Then the artificial judicial person. Artificial judicial person means they are not live. That means they are not human beings, but they are the what we can say, artificial judicial persons means the act has given them a power to act like a person. Okay, so the legally they are empowered as a person. That's why they are known as an artificial judicial person. So for example, the local bodies, universities, municipal corporations, all these are artificial judicial persons. Okay, now you understand what is the person definition includes. The person definition includes individual, HUF, association of persons, body of individual, firm, company, and artificial judicial person. So these seven are included in definition of person. So let's have one example so you will understand deeply what is exactly person means. So here, determine the status of the following. Howrah Municipal Corporation. It is a local authority. Corporation Bank Limited. It is a company. It is a public limited company. Amitabh Bachchan. He is a individual. Okay, but the Amitabh Bachchan Corporation Limited is a company. Then the joint family of Sri Ram, Srimati Ram, and their son Love and Kush is HUF. Okay, Hindu Undivided Family. Then the Calcutta University. What is Calcutta University? It is a artificial judicial person. Then X and Y, who are legal heirs of Z, they are body of individual, because X also one individual, Y is individual, and Z is also individual. So they are BOI. And the sole proprietorship business is an individual, because sole proprietorship and the person are not identified different one, they are the same one. Okay, whatever, suppose I start one business, so whatever I do in business, that is my responsibility, that is my actions. Okay, that's why my business and me are the same one, they are not different one. Okay, partnership business, it is a firm, partnership firm. So these are the status of the individuals or the persons, okay, that we understand here. Next, see the residential status. Why the residential status is so important? As I told you, the tax rates are different for different residential status. So that's why we have to classify first the residential status, and then accordingly we have to calculate the tax. Okay, so person, what person include? That 7-1 as we discussed. What? Individuals, HUF, AOP, BOI, firms, companies, and the artificial judicial persons. All these are considered as a person under Income Tax Act. So all these are classified again in two types: individual and HUF, and other. The individual and HUF are again classified for a residential status, that resident in India, non-resident in India. And for others, others means what is left: BOI, AOP, companies, artificial judicial persons. All these are again differentiated here as a resident in India and non-resident of India. So in case of an individual, because individuals are the person who can move from one place to another, he can live here also and in foreign countries also. But in case of a company, it can't move from one place to another place. So how to consider the status, or what point to be considered to decide the residential status of that other things? Other means in case of a body of individual, in case of a association of persons, in case of a company, or in case of a artificial judicial persons. How we are going to decide the residential status? It depends on their main office, where the registered main office or the head office of that company or BOI or AOP or the artificial judicial person is there. That place of country is considered as a resident of India, a resident of that country. So suppose the Mumbai University, the head office of Mumbai University is at Churchgate. Yeah, Kulaba, no, it is at Churchgate. So, as the Churchgate falls in India, so that's why the University of Mumbai is considered as a resident of India. समझा अक्षताला? हाँ. But in case of a suppose Howard, so Howard University's main office is in where? Is in USA. So that time it is a Howard University is non-resident from Indian point of view. So the Howard University is non-resident from our India's point of view. So how the income tax department going to charge it as a non-resident of India? So suppose Howard company has collaboration with the Mumbai University, and they have some students of our university, and they are offering some lectures or some courses to them, and they had collected some fees from here. So that time, suppose whatever the fee is collected, suppose 10 lakh is collected by the Howard University through the students of Mumbai University. So that time that 10 lakhs is charged, is taxed to the Howard University as a non-resident person of India. Okay, he is a non-resident, or that company, that university is non-resident of India. Let's see about how it deal with the individual of and HUF. So individual and HUF also divided into two things. Classification is there, that resident of India and non-resident of India. So how it is decided whether that person or that individual and or HUF is a resident of India or non-resident of India? So let's see. Again, we have some explanation points here. So we have to go for our PDF. So here, the definitions tell you who is resident in India. An individual is said to be a resident in India if he satisfies any one of the following conditions. That is important one. What is first condition? That the person who stays in previous year in India for a period of 182 days or more. Okay, the person who stays in India for more than 182 days, he becomes the resident of India. Or what is second condition? If he satisfy this one, that is okay. If it is not, then we have to go for a second condition, that if that person stays in India in a previous year for a period of 60 days or more, okay, and this is important, and this condition is also we have to satisfy at the same time, 60 days plus what, that he also have to stay for more than 365 days during last 4 previous years immediately preceding. That is important. 4 previous year immediately preceding the relevant previous year. So in previous year, that is in last year, he stays in India for 60 days, and immediately before the previous years, immediately 4 years, he have to stay for 365 days. Total 365 days he have to stay in India. That time he become the resident of India. So first, if he stay in India in a last year for 182 days, he directly become the resident of India. If this condition is not satisfied, then we have to check the second condition, that whether he stays for at least 60 days in India in a last previous year, and also we have to check that during 4 previous years immediately preceding the relevant previous year, he has stayed 365 days in total. So that time also he become the resident of India. And if these two conditions are not satisfied, then he becomes the non-resident of India. So in this way, the residential status we have to decide of any person, or in case of an individual and HUF. So let's see one of the examples, so you will understand deeply how the residential status is decided. So Sam came to India first time during previous year 2021. So during previous year he stayed in India for 50 days. So whether he become the resident of India? No, because he came to India first time, na? So it is not a point to check whether he has stayed for last previous years immediately last 4 years for 365 days. So he came to India for first time and also stayed only for 50 days, so he becomes the non-resident of India, right? This is how he become the non-resident. Yes, he become a non-resident as he stayed for 50 days only. But if he stay for 183 days, then also what is the main condition? 182 days in a previous year. So he stayed 183 days. So that's why he become the resident in India. Then he stay for 153 days. As the first condition is telling you about 182 days, but he not stayed in India for 182 days. So second condition we have to check whether he stayed for 60 days. Yes, he stayed for 60 days because he stayed for 153 days. But the next condition, and that we see now, and condition is that 365 or more days during 4 previous year immediately preceding the relevant previous year. So this condition he can't satisfy because Sam came first time in India to India. So that's why Sam become the non-resident of India for previous year 2021. It is very important one that residential status may vary from assessment year to assessment year. That is very important point we have to discuss here, that residential status may change every year. Okay, so that's why we have to check all the time the residential status. So different for each year. Residential status is different for each year. Every year we have to check the residential status of any person. Then the single status for each source of income. Single status for each source of income means a person can have only one residential status for a previous year. He cannot be a resident of one source of income and non-resident for another source of income. So there are 5 sources of income. You know, I will tell you these are the 5 sources of income. Let's discuss. What? Salary, income from house property, profits and gain from business and profession, then the capital gain, and next one is the income from other sources. So these are the 5 heads of income or sources of income which are charged under Income Tax Act. So whatever the income you earned during the previous year, all that income is classified between these 5 heads of income or 5 sources of income. What are they? First one is the salary, then the income from house property, next one is the profits and gains of business and profession, then fourth one capital gains, and fifth one is the income from other sources. These are only the 5 heads of income which are there in income tax, and whatever the income you earn are classified under these 5 heads of income only. So in case of residential status, you cannot get one residential status for attach one residential status for one source of income and another residential status for another source of income. So for example, you cannot be a resident of India for salary purpose, and you cannot be a non-resident of India for a business profits and gains from business and profession. So there should be a single status for each source of every source of income. Okay, then the impact of citizenship and residential status both are a different one. Citizenship means the person who is originated or who is originally stays there, he become a citizen of India, he become a citizen of America, USA, right? That is, citizenship is different one. So citizenship means in Marathi it is nagrikatva. Okay, that is different one. And residential status is different one. Citizenship, citizen of India may be the resident of India, but for income tax purpose he may not be the resident of India, right? So residential status is different one and citizenship is different one. Citizenship mostly decided by the origin of birth, okay, and the how much time you stay there, that also going to decide, or whether you bear in India, in America the green card is there. So when you get the green card, you become the citizen of USA. So in this way, India also offers citizenships to many peoples, like some of the Bangladeshians came here after that whatever the war has happened, so they have given the citizenship of India. That was a different. and we are also going to get the citizenship of India by birth itself, but the residential status is different. So suppose I am a Indian, that is my citizenship, but if I went to USA for job purpose for 2 years, then I become the non-resident of India in under the Income Tax Act for tax purpose. You understanding this? Then the country specific. A person can have same residential status in more than one country. Yeah, he may be the resident of India as well as the resident of USA also. How it is? Because the conditions that he have to stay for 182 days in India. Okay, but suppose he stayed in America for 60 days, and in last previous immediately preceding previous years also he completed that 365 days conditions. So that time he became resident of India as well as the resident of America also. So this how the residential status affects. So what we have to see, we have to see from our tax point of view, our what we have to clarify about the, we have to see the Income Tax Act, and as per our Income Tax Act, we have to decide his residential status and the income and get the taxes calculated. Okay, this is what the main thing we have to decide. Whatever if he may have a many residential status in many countries, but we nothing to do with that. What we have to calculate, we have to calculate whether he stayed in India in previous year, yes, how many days, then we have to calculate whether he is a resident of India or non-resident of India. That's all. This is how the residential status should be decided. So let's take another example of this. So you will get the clarification how the residential status of any person may be decided. So second illustration is Andy, a British national came in India to India for first time during 1617. Okay, during the financial year 16, 17, 17, 18, 18, 19, 19, 20, 20, 21, he was in India for 55 days, 60 days, 80 days, 160 days, and 70 days respectively. Determine his residential status for assessment year 21, 22. So what is 21, 22? It is a assessment year. What is the previous year here? It is immediately before this 21, 22 years. That means 2021. So 2021 is the previous year. So in 2021, he stayed for 70 days. That means it is more than 60 days, right? Okay, so let's see here. They have explained this. So he stayed for 60 days. So the second condition we have to check now. During the previous year 2021, Andy was in India for 70 days. So it is more than 60 days. Now we have to check the 4 years total 365 days condition, right? So let's check whether he is staying for 365 days or not. It is 16, 17 he stayed for 55, then 17, 18 he stayed for 60 days, then 18, 19 he stayed for 80 days, and in 1920 he stays for 160 days. So it totals 355 days. Okay, not a 365 days. So though he stayed more than 60 days in previous year, but immediately preceding last 4 years he does not stayed for more than 365 days. So he is a non-resident of India. Understand this? He is a non-resident of India for previous year 2021. In this way, we are deciding the residential status of any individual. So we understand how the residential status of any individual is decided. Also, we are also discuss about the 5 sources of income, that is heads of income, and these heads we are going to discuss in detail, study in detail in a coming lectures. Okay, so for today it is over, as we have studied the definition of person, then also we have studied the residential, how to decide the residential status of any individual, and also we had discussed the some of the examples which are there in order to decide the residential status as well as the status of a person. whether he's HUF, AOP, BOI, that was. So these two concepts now I think clear to you. Also you can refer these again and again, and also adjust your speed of the video as per your convenience. Okay, so you can increase the speed of the video also, or you can pause the video, write your notes also. So whenever you are studying, so that time you used to make some notes in your notebook, so it will help you to refer at any time, and in future also it will be beneficial for you. So okay, take care, and bye for today, and let's study hard. And in next lecture we will discuss the head of income, that is first head of income is a salary. So till then, it is have a good day and bye.